ASML stock dropped nearly 10% today after reporting earnings. And the question is the market overreacting? Did they miss the point of ASML's strength? And is this a buying opportunity? Too long don't watch. I believe the answer is yes. And I'll explain a little bit more in today's episode. All right, so today we're going to start off here with fiscal.ai. Make sure to check out my special promotion at fiscal.ai/Jose. This is my favorite platform when it comes to investing. I'm not going to sell it to you right now. You're going to see why this is crucial and why I use it every single day throughout the episode, but make sure to check out the link down below. So ASML did report earnings today, and unfortunately, we can see the stock was down roughly 8%. At one point, the stock was down nearly over 10%. Now, the first thing I want to look at is just forward PE ratios. And this is crazy. I'm looking at almost the past decade here on forward PE ratio and looking at the median of ASML. This is ignoring any kind of overstretching. It's sitting at 29.13. And right now, the stock is sitting at roughly 27.36 forward PE ratio. So it is a lot lower than its overall median. And I want to say, as we're going to go throughout this episode, there is a lot of tailwinds that can help increase the company dramatically. So I think this is probably the key reason why I believe this is an overreaction. The forward PE ratio, but not just the metric itself. Because I know this industry so well, I see the kind of tailwinds behind this space are creating very good opportunities. Now, I also want to kind of take a look at kind of net sales revenue and the other of their equipments, which is in the blue, and then service and field option revenue, which is kind of their service business. I'm pretty excited that the service business continues to grow and continues to be bigger and bigger each quarter and every year. The reason this is crucial is this is kind of the maintenance plans, right? This is kind of the maintenance plan you buy when you buy these ASML equipment machines. So it doesn't matter if you don't buy new machines, as long as you have this maintenance plan, and these machines are super, super expensive, that you want that maintenance plan. So it's kind of like that reoccurring revenue, nice margins coming out of this. And overall, this is going to be a nice sticky way that even during any downturn, the company continues to have a nice amount of free cash flow coming in to survive any negative pressure and then any negative headwinds. So I like to see this, right? We can see $2.1 billion here. Euros actually, and this is compared to a year ago when it was about 1.5. So big changes there. Now, the other thing I want to kind of talk about is net bookings, right? Net bookings weren't that bad, roughly 5.5 billion euros here in net bookings. This is much better than kind of the market was expecting. Unfortunately, for those that are not familiar, this is a company that only has a selected amount of big customers. So they're at the mercy of when their customers want to place those orders. But overall, net bookings continues to grow. And I think that is another bullish scenario for the company. The final thing I want to showcase is here's a graph of total DUV systems, which is the bigger one, and total EUV systems in the last 12 months. We have about 50 EUV systems sold this quarter. We're seeing some strong numbers here, right? We've only been in the 50s a few other times, July and December of 2023. I do believe this number is going to continue to rise, and we're going to see a nice uptrend, and this is a very high revenue segment for them. So here, just from fiscal.ai, and again, make sure to check out fiscal.ai/Jose for 15% off. We got a lot of information. And just because we're going to look at kind of all the next tailwinds that this company has, I believe this is an opportunity. So I'm going to talk a little bit here about kind of the bullish and bearish growth engine. So first, the bullish case, the AI-driven demand. AI serves as the primary growth catalyst across both logic and memory, driving demand for leading edge capacity, right? So the only way you can kind of make these amazing AI chips is thanks to ASML's machine. Now, I'm not necessarily just because NVIDIA needs more chips doesn't mean you need to buy more ASML machines. But we are going to come to this era where more consumer AI electronics are going to happen into the consumer space, in the automotive space, that the volume of chips is going to increase dramatically. And that volume of chips both in logic and memory side, are going to lead the need for better EUV machines and for better leading edge capacity. So that is the bullish case. It's not just an NVIDIA issue because NVIDIA, there's plenty of supply to make the chips for NVIDIA products. It's more kind of the driven demand that is going to come when the consumer space and when we start to see even more and more AI chips spread out through all different types of devices. I mean, you can think about it in just the autonomous vehicle market, how many more chips, but then the robotic space, right? You're going to need more chips there in forms of when you're adding some form of AI chip into some form of Internet of Things, be it your thermostat, be it your computer, you need even more and more chips, and that increases the volume. The second kind of bullish case is they are making some nice progress in their high NA, which is kind of their top leading machine. They mentioned that the 5200B system boosts productivity by 60%, enabling a critical shift to single exposure EUV. The third thing is they do still give a strong outlook for 2030, 44 to 60 billion euros. A big gap there, all right, a huge range, but they do expect that this market continues to grow. Now, let's go to the bear case. And I do believe the bear case is what's driving this negativity, especially the first, actually all three are actually very important reasons why the stock is down. First is geopolitical uncertainty. There was a lot of discussions of tariffs and global tensions, and it's creating caution among their customers, potentially delaying investments. Again, I mentioned that they only have selected amount of customers, and certain customers are seeing some issues like Intel, right? So that's also delaying the uncertainty of how this company is going to do in the short term. And that uncertainty is not something the market likes. The second is China restrictions impact. More restriction and export controls continue to hit this company. And most recently, they had to adjust about $1.5 billion in backlog made due to export controls, highlighting regulatory risk. We're going to see the backlog is still pretty strong, but seeing these kind of pressure and seeing kind of adjustments happening because of export restrictions creates another added fear. So the first is that uncertainty with geopoliticals. And some investors were seeing that geopolitical and tariff uncertainty discussed by management as an excuse. The second is, like I mentioned, that China export restriction. The third is because of all this, the company was unable to give us re-information of their 2026 outlook. So they do believe that they're still prepared for growth in 2026, but now they mention that they can't be for certain now. And that uncertainty created even more and more negativity toward the stock. I mean, in the long term, one of the best ways to look at it is we're seeing fabs being built all over the world, here in the United States, in Taiwan, in Europe, and those are going to be filled with high NA EUV machines or EUV machines in general. So overall, there is a lot of tailwinds, and I do believe a lot of it is going to outweigh the short-term bearish scenario. Like I mentioned, in forms of their outlook, they still gave us a high end of 60 billion euros and a low end of 44 billion. In gross margins, they still expect about somewhere north of 56 to 60% gross margins by 2030. They still gave us those numbers. Again, the big issue was they had a strong backlog, still pretty strong, over 30 billion, but they did have to adjust roughly 1.4 billion, and you don't want to see that. Now, with high NA technology, there is some transitioning time, but they do mention that one of the biggest things is the shift from multi-patterning low NA EUV machines to single exposure high NA EUV is a cornerstone of ASML strategy. That this overall can help things like efficient margin rates, not margin rates, yields is the word I'm looking for. So they, again, I believe there's a lot of exposure here. Now, the final question is, again, I mentioned, I believe this is a buying opportunity. Will I be buying the stock? I am still uncertain. The main reason is the following. ASML is already a big player. I don't typically go for big player companies unless I believe they're going to be a crazy outgrowth story. I'm not just looking for market beaters, right? Market beaters, I could just go with a semiconductor ETF. I believe ASML can do better than an ETF, but I'm looking for those crazy returners. And I think those crazy returners come with a little bit more risk. That's just my investment styles. So this has created a bit of opportunity, in my opinion, in semiconductor equipment companies that are a little bit smaller. For example, Onto was down roughly about 2% on the day. It was a little bit down, a little bit more earlier on, but companies like this that are smaller plays in the equipment player is where I believe the opportunity lies for me. Now, if I was looking for a more mature company, someone that fits maybe that strength, not as highly volatile, I think ASML would pick that, but it's just depending on my investment style. Now, all this can actually change by tomorrow because tomorrow TSMC is reporting earnings. And TSMC is one of the biggest capital expenditures of or spenders of ASML and the biggest customer of there in the equipment space. If TSMC reports earnings earlier this in a few hours, and they end up saying, look, we're actually increasing our capital expenditure dramatically, we can actually see a very, very green day for ASML tomorrow. Now, obviously, if TSM tomorrow goes, look, we're actually lowering our capital expenditure, which I don't think is the case. I think that's very unlikely. Then you can also see more negative pressure on the stock. But I think it's so crazy how this company just reported earnings, and just tomorrow, in less than 24 hours, we could have a shift or an addition to this sentiment here. Again, if you enjoyed the video, if you learned a lot today, make sure to subscribe to the channel. I'm trying to hit 75,000 by the end of the year. And one other way to support the channel, this really does support the channel, is if you do sign up using my link. It helps out dramatically. Take care, have a good day, and see you all next time.